OPEC and its allies have just agreed to slash global oil production to deal with the major slump in demand and prices that the coronavirus pandemic has caused. So OPEC producers, plus a group of countries led by Russia, struck this unprecedented deal yesterday to cut the global supply by nearly 10%, 9.7 million barrels a day. This takes effect as of the start of next month. It is the largest ever cut in oil output. Non-OPEC countries are also signaling they are on board to cut production. That includes Canada, except Canada hasn't said exactly what we'll do. It will say it is with the provincial jurisdiction here. So there are implications for this country as a major oil-producing nation, particularly in the province of Alberta. We want to take some time to look at this with our senior business correspondent, Peter Armstrong. Great to see you, Peter, as always, and to tap into your knowledge about this. Thanks for being here.
Oh, glad to be here, Heather. How are you?
I am well, thank you. So this is, as I've said, historic, nearly 10%, 9.7 million barrels a day. Can you explain it in a little bit more detail, Peter, and what it means?
Well, listen, let's look at it and let's give them the benefit of the doubt, because OPEC, though it is a cartel, rarely gets its act together and acts like a cartel. This is big. Heather, as you say, this is bigger than anything we've ever seen before, but it's still not even remotely enough. I mean, let's say OPEC does act like a cartel and they do follow these new production cuts. Let's say they actually take off 9.7, nearly 10 million barrels a day out of the global market. They're still oversupplied. The global oil supply is still 10 million barrels a day more than we're using right now. So this initial cut will barely make a dent in that. But they had to do something, and this is big. This is bold. This brought in this, hopefully at least, has ended this price war that we had seen between Russia and the Saudis, and will begin to cut into the oversupply. So when eventually we start driving and shipping and flying planes again, and we start using oil again, then they're in a better position. And so, interestingly, it's actually timed out. It's really front-end loaded with 10 million barrels a day in the first year. That drops down to 7.6 million next year, all the way down to 5.6 million between 2021 and 2022. And that's where I think this might actually start to bite, is as we've seen prices begin to climb a little bit by then, and as we've seen global oil demand back into something of a more normal situation around that time, that then if OPEC can keep its act together and actually act like a cartel, then you can see some balance to the market. But man, Heather, this is a very, very long game.
All right. Well, then let's look at Canada specifically as it relates to this, because the request or the suggestion from OPEC Plus was that other oil producing countries like Canada should also reduce supply. They were looking for 5%. Here's what we had from Natural Resources Minister Seamus O'Regan, Peter, how this is good. We welcome any news that brings stability to global oil markets, and how deeply concerned the federal government is about price instability and the impact on thousands of workers in Canada's energy sector. But then it goes on to just say we're committed to keep working with provinces, business, labor, Indigenous communities, and other international partners. No direct response in terms of what Canada was likely to do, because it is a provincial matter. What do you think we're going to see here?
Well, my best bet, and it really is just a hunch at this point, we should get more information on how the industry is actually going to react to this over the course of the day. But my best bet is that the prices in Canada became so low because the price fell off a cliff. I mean, WCS, the main Canadian heavy crude benchmark, fell as low as $3.82 a barrel, which is basically free. Because prices fell so low, we're not going to see a lot of production in Canada. So it's not really this sort of voluntary cut in the way we would traditionally think about it. It's that prices are so low, producers are going to try to sort of slow production to work their way through this, and then eventually, come out the other side. You had the tweet from Philippe Champagne. Let me use a tweet from Jason Kenney, who said, and I'm quoting here, "We're glad to see sanity return to global oil markets. As I've said, OPEC Plus started the fire, and this was their responsibility to put it out. Many challenging months ahead with very low demand and huge inventories, but at least there now is a path to recovery."
Peter, thank you very much. You are right. We will look forward to some form of reaction federally, provincially today on all of this, but thank you for setting it up and helping us understand.